Hello guys, so we're looking at Kiwi dollar. This trade is actually did really well, um, and there's quite a lot of confluences for this trade, and I'll just explain a little bit about it. This one has a little bit more of a complex background towards it. So let's see where it was when I first saw it. So it was on his way back, so it was somewhere around here. It was on his way back, and I did see that there was an OB sitting here on that blue candle. Now price is obviously bullish in the overall, and if we do go on the daily, let's go here, we can see that price is very bearish. However, if we go higher, we'll have a look at see what's going on. Right, so price is fairly bearish on the higher time frames, and price has just entered and rejected is rejecting a weekly order block, right? So this trade has massive potential from what I saw initially. And if we look on the daily, price is also rejected another order block, which is just here, right? And what we can see is, if we remember our Wyckoff pattern, we can see that we've got a spring that's formed here and a break of structure. So we're expecting prices to come and retrace somewhere about here, and I'm expecting a bearish push. Now, in what we can also say is so as we know, price needs to come and break structure to grab liquidity, right? Now this could have been a break of structure, grab liquidity, and obviously started this move down, or this can be the grabbing liquidity. As we can see, it's actually come to an OB sitting here, right? And it could be just a massive push up. Now with that in our minds, we know that we can't we know that we shouldn't really set a limit based off that. We shouldn't really place a limit off here. I did initially, then I thought about it a bit more and thought, if this is a liquidity grab, price is just going to go flying. Price is just going to go, and momentum is very quick to the upside and is very slow. It's quite slow in the bearish move, as in if we look here, how momentum is from here to get to that high, that's 1 2 3 4 5 6 candles, right? And then to come down from there, so this move from there to down here, 1 2 3 4 5 6 7 8 9, so 9 candles. So it took longer to come down. So we know that with momentum being quite quick to the upside, it tells us that there is a bearish push coming, because it's slower to come up but quicker to go up, slower to come down and quicker to go up. It's a very odd way to see it, but we don't need to worry about it too much. We just something that just to have in the back of our mind. Now, so we know that we want to enter a bearish trade, a sell, anywhere in this zone, right? So what we do, we just waited, we waited and waited and waited for price to come, and we want to see what kind of reaction we get. Okay, and what do we get? A nice clean zero drawdown rejection off here. We could obviously set a limit, which I didn't, purely because of the reasons I've just explained. Let me get rid of this order block, because now that we've seen it, and I'll show you where my entry actually was. So we waited a little bit. Now if we did enter on the 4 hour, our stop loss would have been about 25 pips or 30 pips, which is perfectly fine. I'm happy with that. Our first target would have been this low. If we broke here, we can potentially just ride it all the way down, purely because what we saw on the daily time frame and the weekly time frame. So we know we got a big move potentially on this trade. Now we also see our Wyckoff schematic playing out. We've got this spring here, we've got a break of structure, because we've got structures forming, and break of structures come back, and now it's starting to retrace, right? So everything is coming, playing quite nicely for this trade. Now let me try find and see where my entry was. I can already see it. So right, so the first entry I actually got smoked on, so I took 2% loss. And the first entry was actually very stupid, because if I look at it now, I can see that I entered a sell limit around here because of this breaker block. However, what I didn't wait for, it didn't break structure, right? We didn't create a new lower high, so there's no confluence for me to take that trade apart from the breaker and the inefficiency. So that trade I shouldn't have taken anyway. So you know, it's a learning curve for me. To be honest, with these trades, because they're on the minute chart especially, some of these decisions are quite hard to decipher when you actually are doing it. It's something you get better at obviously with time, but this one was because I knew that it's a bearish trade and I wanted to get in. That was just me being a little bit impatient, because obviously when we come here, we've also created new lows with a break of structure, a new lower high, and now we can see inefficiency and we can see a breaker, right? So my entry point was actually here on that. My stop loss would have been 3 pips above here. The only reason I'm marking it because I want to draw it out on the higher time frame for you guys so you guys can see it. So let's put our short position, actually, let's go back to the 1 minute. I'll just place it on here. So we're gonna got a short from here. Our stop loss was, it is where it is, which is fine. Our entry point was just on that breaker. We did get a little bit of drawdown, and I know exactly why, and we'll see how it plays out. So if I start playing it, right, so price, okay, now it's triggered, and it actually did really well to start off with. We had very minimal drawdown, and essentially what price did here, price actually came back to this OB that was sitting here, which we could have obviously placed a trade at. However, I know that inefficiency and the breaker block is quite a nice combination to have. We could just place it on the OB, so we know we got 2 entries. My stop loss was quite well. Actually, no, my stop loss was 3 pips. I don't know why it's up there actually. My stop loss was 3 pips, so it did get fairly close-ish. So my stop loss was up there. I know that it was protected anyway because it's either going to go here or the OB. If it breaks through, it means I was wrong. But we'll see what happens. So price actually came back 3 times, and then it started its move, which was very nice. It was a very nice move overall. We actually salvaged the week for the signals, which was quite nice because we were quite unlucky. But if we see this trade playing out, it was NFP as well. As you can see, NFP literally didn't do anything. I mean, USD was weak, and what happened? We had a little small spike, but what happened? Price just continued. So yeah, that's why I don't really trade NFP. And then we closed the trade out. It hit our trading stop. I can't remember where. I know I closed at 30% for me. So it would have closed us out about 15. Oh wait, no, sorry, that's wrong. Sorry, I was looking at the wrong number. So we would have closed out. Sorry about that. We closed the trade at 15 RR, so I believe somewhere around there. Let's just play it out. So, you know what, I'll just do this. Right, so that's the trade playing out, and yeah, so it was quite nice. I mean, we did have a fair few pullbacks, but obviously being NFP, it was obviously quite big spikes. Now price obviously continued. I should have really, to be honest, I would have wanted to hold it if it was Monday or any day in the week, but because it was Friday, I obviously wanted to close it. But yeah, this trade was actually made it to let's see how far it got to. It made it to a max. It went to 25R, so it would have been about 50% for me on 2% risk. With this trade it was very nice. It was very textbook, and we could potentially see more downside to it. We might get another entry in it if we see, but however, we missed the ideal entry that we wanted. But yeah, so that's the breakdown of Kiwi dollar.